Welcome to our weekly market review, and after a jam-packed week last week, this one should be fairly quiet. Apart from the MTBBS, the Rand's performance is the other noteworthy event last week. The currency was able to capitalize on some dollar weakness on the back of disappointing labor data. It shows the momentum behind fresh hiring has dissipated, and this might very well be the calm before the storm. The Fed will definitely be paying close attention to this development. The data was sufficient to convince markets that the rate hike cycle is very much done and dusted. This prompted a sharp drop in US Treasuries, which ultimately saw the Rand appreciate to 18.25 against the US dollar. It was further boosted by inflows into SA bonds. Now, all this bodes well for the country's inflationary outlook. But treat the strengthening with some caution. The underlying structural picture remains worrisome. Threats continue, including a logistical jam at South Africa's ports, which could put a damp on the country's exports. And then there's our diplomatic stance on political sensitive issues, which often seems to be at loggerheads with Western superpowers. For one, it has put the country's inclusion in the AGOA trade agreement between the US and Sub-Saharan Africa in jeopardy come the review September 2025. The recent AGOA forum held in South Africa has done little to quell fears, but it's a membership the country can ill afford to lose. Moving over to the UK, where the Bank of England decided to put rates on hold last week, it's very likely that they're also done with the rate hike cycle. So too in the EU, last week's data showed a contraction in GDP for Q3, while disinflationary pressures proved stronger than expected in September. The central bank may turn less hawkish before the Fed, becoming more growth-focused in the months ahead. Then hopping over to China, where the country's economic recovery remains fragile and highly imbalanced. PMI prints out last week points to continued manufacturing weakness, while business confidence declined to its lowest level in a year. China's economy is flagging, and it raises questions about the global growth outlook as well as prospective commodity demand. The recent data should spur the government to press ahead with its stimulus program. Local releases out this week include mining and manufacturing production for September. Both sets are expected to reflect the challenging economic landscape. Then data on our gross reserves will be out on Tuesday. And internationally, US consumer confidence data will be out later this week, as well as the UK's GDP data for Q3. We're expecting a slight contraction there. Other than that, it's the developments in the Middle East that will remain the political focal point this week, with its wide-ranging impact on markets. So that then the week that was and the one to come for the markets.